What's up, guys? Welcome to You First Buzz. I bring you Brandon Carrero from Carrero Mortgage Advisors. We're going to talk a little bit in regards to what everyone's talking about today, which is the Bank of America's no down payment program. We're going to talk a little bit about the market, interest rate, the forecast of what we see. He is the best lender down here in South Florida. I've worked with him for many years, and hopefully we can answer some of your questions as well in regards to the video and our topics for today, right? So one of the thoughts that I was talking about, because I think September 1st, it came out, Bank of America came out and said in select cities they're going to come out with zero down payment programs. Right. At first I was like, when these programs come out, when these big banks come out and get creative, it's like 2007, 2008 again.
Sure.
So obviously I was a little scared, so I called Brandon. I was also talking about the fact of discrimination towards blacks, whites, and all this stuff. There's a whole bunch of stuff that I was even talking about. So I know everyone has conversations and are actually talking, and my phone's ringing in regards to this particular program. Right. So what are your thoughts in regards to that Bank of America zero down payment program?
Well, first and foremost, thank you for having me on the You First Rockstar Real Estate Show. I'm honored to be here, and I'm happy to share with you my thoughts as the broker of the year, as the mortgage broker of the year, rather, for 2022 here for the Southeast region. So thank you for having me.
Of course.
My thoughts on the BOA, look, from the consumer's perspective, because I think that's who really wants to know about this product. It's an amazing product, right? On the surface. But then when you really read about it and you think about it, say, well, is there a catch? There may or may not be, but really it's all about the facts, right? So the facts are this. Okay. Number one, the purpose of the mortgage is to utilize their funds for a zero down payment and a zero closing cost. That's a fact. Okay? So sounds great so far. The second part, but what's the difference is, well, the amount of assistance. It's $15,000. So what Bank of America has done two things. One, they're going to extend you a mortgage and they're going to give you a grant, right? So they're going to have a first and a second, okay? So far, so good. But that grant is only $15,000. That $15,000 now covers your down payment and up to your closing costs.
Which is not much.
That's the thing in South Florida, right? It's only in 5 markets, and what is $15,000 going to get you in this market? And why we say it's not much, it's because the prices are too high, right? I mean, what are you seeing in the marketplace right now?
Well, yeah, so matter of fact, today, Broward County, I was looking at townhouses and condos. There's a 23% increase in regards to sales price volume, right, in comparison to last year. So even if you're looking at $350,000, right, that $15,000 even as a down payment, it's a little too high, right? So that's not going to really qualify, right? If I get into $350,000, $400,000, which is your average, right, single family house or high end condo or whatever the case is, right? Which is probably, to the program, it's targeting low income areas.
Sure, or incomes that are classically, I think they call it a special purpose credit facility, if I'm not mistaken. And it targets areas that are traditionally like African American or Hispanic. And they're allowed to do this under this special exemption, let's call it that. They're able to lend in these specific areas, which is why you brought up an excellent point. Well, is this discriminatory by some? And there's some regulatory guidance that speaks to, hey, they're allowed to do this because of the ECOA Act and certain provisions there. So coming back up, just to share with you, they're allowed to do this. So that's an important thing, because people were asking, well, because we've been brought up, and rightfully so, hey, not to discriminate, not to, we lend equally, we want fair housing, it's all to be fair. So in this particular case, it's just a special purpose vehicle or special purpose credit program for these kind of borrowers in those neighborhoods. Gotcha. So to your point, it's meant to be for those people that can qualify. Now there's income caps. I think this is an important part. Not everybody can just walk in and get a zero down mortgage, zero down closing costs. It's really, you have to be under a certain income threshold. So, it's a great product, folks, no doubt, right? but it's very important to see how you qualify for that product. And I would share with you, those consumers that need assistance from yourself, like from a real estate guru like yourself. You got to get with him because he's going to be able to guide you into the right product. Get with him in the right way, because with Mo, every client that I've seen with Mo, he interviews them. He makes sure that they are in complete alignment, so that way they can find success in the real estate purchase market. So get with Mo, and he'll figure it out. Whether with myself or Bank of America, and I'm happy to coach you up if you have questions on this Bank of America product before you walk in there, because you may have questions about your credit. How does this really work? I'm happy to share that with you, because helping out the consumer is a win-win. And
right.
We want a good, long-lasting business relationship with our clients.
And that's good too, right? Because on the surface, again, everyone's talking about it. So right. It is a shiny object. There's certain criteria and requirements that fall in play with that particular program. So, obviously dealing with Carrero Mortgage Advisors, then you guys have an opportunity, or even with myself, just to ask those questions, right? This is kind of why we're kind of talking about this and some other stuff today. Right. But just to kind of cover the surface in regards to that program, because again, it is something that obviously not just us, but the media and everyone else is talking about.
Oh, for sure. Listen, who doesn't want a 0 down payment, 0 closing cost mortgage? My goodness, I want one.
I wish I had one.
That's what I'm saying. I want one. So it's a good thing. So from a consumer's perspective, it's a good thing. Now putting on my mortgage broker hat, I as a mortgage broker would love to advocate for a product like this. Like, for example, our veterans have 100% down payment loan that they don't have to put any down payment. They have to pay for their closing costs, but 100% down payment is not 100% purchase with using a mortgage can be done responsibly. The veterans have proved it, right? So why is this product now kind of innovative when really the consumer should have access to this product, not only from Bank of America, not only from the big banks, but from mortgage brokers, mortgage lenders across America, who really should be able to foster home ownership in disadvantaged communities. I mean, the mortgage broker and the mortgage lenders and the independent mortgage bankers and lenders, we really do a good job of delivering home ownership to multiple people. And I think that this particular product, I hope it takes traction, so that way we all can offer, and you can come in on a 0 down payment mortgage in the future. I think it's a good thing that, we're having discussions about housing, we're having discussions about equality, we're having discussions about, hey, more home ownership, because who wants to pay rent?
Right.
I mean, what do your clients tell you about rent? Like, is it too high? What are they telling you about rent?
It's ridiculous.
It's ridiculous. Exactly. Like, how does one, do you right now you probably are renting higher than a mortgage in most of your clients right now?
A townhouse in Miramar is $2,700.
My goodness, folks.
Yeah.
I mean, it's a townhouse, right? And
but everyone needs those opportunities. So that's why these programs, they're good, in my opinion. Right? There's, it's not going to last long. It's something that comes into the market, comes back out of the market. Right. There are some guidelines in it of how much they're going to be producing with this particular program, and I think from the research that you did, they're already capped at 50% already. So right. Who knows how long it's going to last, but it is something to be educated and be in the know, right, in regards to the terms. One of the things that you said that was important was about the VA.
Yeah.
The risk on a VA is very, very low in comparison to all these other loans that are coming out. So the question is, why aren't they learning from the way that the VA actually does it, right? And they earned it, but they should be learning from them, because the risk of those particular loans on delinquency is very low.
They're lower, yeah. I mean, the VA's got that right. I mean, as an entitlement, as a benefit, the VA really does a great job in administering that program. To its credit, and yes, I am saying that the government actually does something right, right? You know what I mean? Like, wow, woo, God, don't come after me, So no, it's really, they actually do that right. Believe it or not, the veterans have the lowest rate in the marketplace, and rightfully so, right? Our veterans serve America. They've really done a good thing. They should have some benefit for service. But there should also be further access to homeowners because, I think of, right, service. Yes, our veterans have served, but there are a lot of other individuals that are serving in different ways that could benefit. If some in a nonprofit space, some of your nurses and teachers, let's call it what it is. To me, who I love serving is single family mothers, right? That's a soft spot for me who just have kids and want to get in a house and they're tired of renting and want to start that home ownership, that wealth creation through home ownership. I love serving that. Why can't we not have 100% down payment for those people? So,
that would be nice.
But folks, that's where working with pros like him, pros like myself, and other pros and colleagues in our industry, who can set you apart, who can really set you up for success. That's what you need to be doing, is working with someone who's going to set you up for success every step of the way, who's going to hold your hand every step of the way, and who's not going to drink so much coffee.
Well, I will ask you this, right? So Brandon, so a lot of people right now, obviously, the market has slowed down a little bit.
Yep.
Housing is a little bit longer, right? And they're lasting longer than they were before.
Right.
I used to joke around, right? All these realtors, they'll sit there and be like, "Oh, sold it one day, $50,000 higher," right? It's like they're quiet. They don't have those videos anymore.
Where'd you go?
So it happens, right? They're staying longer.
Yep.
Even agents, from a real estate agent,
right.
For the people that got into the business within this 5 years,
right.
They don't know how to do real estate yet because it's been so easy. Now they have to learn how to negotiate and bring the price down with their sellers.
Yep.
So now it's learning new skills, right?
Yep.
So the market obviously is changing. So the reason why obviously it's slowed down, there's still a little bit of inventory. The inventory is just selling a little bit later. Mm-hmm. Property values are still going up. But the question is that the reason for the slowdown is obviously what's happening, the interest rate.
Right.
So what do you see happening with the interest rate right now in today's market?
Great. I receive calls all the time on interest rate. Where do you see it going? Where it's heading? What's going on? So here's what I love to share with everyone, right? To follow a general trend. Believe it or not, it's the 10-year treasury. So if you Google on cnbc.com, and I'm going to answer your question where we're going, but this is our little fun fact for getting this far in this video, right?
Give it to them. Right?
So this is your gift number one. Like, you got to go ding, get to the ding. Is that, if you Google cnbc.com, 10-year treasury, what are you going to see? You're going to see a chart. And on that chart, you're going to see it go up and down, up and down, up and down, right? So as the 10-year goes up, mortgage rates go up, right? So that's the correlation. So where's the trend been, right? The trend has been steadily up. It'll go down a little bit on the 10-year, and then it goes back up. So mortgage rates are priced higher than the 10-year. So when the 10-year treasury goes down, folks, your mortgage rates are in the trend to go down. As the 10-year treasury goes up, mortgage rates go up. So that leads me to your question, or the answer to your question, because that's a great lead up. The 10-year is trending up. So mortgage rates are going up, right? So we expect that the mortgage rates are going to continue to go up. Why? Because just as you mentioned, we're looking for, or the Fed, it wants home prices to come down, right? Affordability, inflation, commodity prices to come down. Taking buyers out, so supply demand, taking buyers out of the market to drop prices. That's really what the intent is. The question is how high do they have to raise the bar, right? So back in, 1981, 1982 range, it was about 17%, their interest rate. 17%, right? 17%.
Tell that to the generation today.
Right? They're like, what? Right? But let's put in perspective. Prices were lower, right? So home prices were lower. And we right now in our studios we have a monsoon on the outside, so you might hear the thunder. That may be the interest rate god telling us to be quiet.
But you know what's funny is I was talking to somebody from Ecuador, and over there the lending's a little bit different. Is you have to have capital,
right?
30-50% down. Interest rate is like 18%. It's crazy, but that's what they've always been used to.
Right.
So when you have individuals now talking about the increase of interest rate, yes, in 1980 it was X amount, right? What other year would you say that it's been 5.5%?
So historically, it's kind of been there. It's kind of average. If you're going to be looking at a historical average, you're looking in that 5.5-ish range, 5s-ish range. But we're coming off, to your point, August of 21, the rate was 2.77. So optically, we're like in shock. Oh my God, I'm at 5, right? But really, right now today, when we're recording this video, it's 5.89. So 2.77 to 5.89. Yes, it is up, but marginally, right? The cost of borrowing is still reasonable, right? There's still benefits.
But look at. So we as individuals and consumers,
right,
we have a problem of, we're very short-sighted.
Sure.
Go back 2019, I think towards the end of the year, correct me if I'm wrong, towards the end of the year, it was actually peaking over 5%.
Yeah. It was starting to rise before the pandemic.
And then it dropped, and that's where we all got,
excited. Buy.
But even then, it was at 5.1, 5.2, I believe it was. Yeah. Right. And nobody was saying anything. But then we got so accustomed to these low rates, and now it's like, oh no, this is crazy, So it's again, I think we're just short-sighted in that area.
No, you're right? The cost of borrowing shifts, right? Who doesn't like a low rate?
Of course.
Right? Everybody's going to so it's natural that and purposely, right? The Fed wanted low rates to incentivize economic activity during the pandemic, to keep the GDP afloat, to keep everybody afloat and all the wheels turning, so we can keep rolling, but so we didn't crash. So that's what they did. So they increased the money supply. Now they're taking out the money supply, and so we're increasing rates. And now, so you're kind of like, it's like the medicine, right? This is the medicine we need, but we really don't like it. My daughter hates cough medicine, so she's like fights me on it. Same difference, That's so we're taking a little bit of our cough medicine right now to take the money supply out of there. So, but you're absolutely correct. But what happens at some point? The consumer says, "I'm done. I'm tapped out. I'm not going to buy." And if more consumers say, "I'm tapped out. I'm not going to buy," and then now we have what happens? We've gone too far. The pendulum's swung too conservative with regards to rates, and and then they'll start lowering again. So the one thing they've taught us in real estate school, I don't know if they taught you this, it's a cycle.
Right.
You go through expansions and contractions, right? Depending upon where you are on the cycle drives what you should be doing in that cycle. So
and so to that question, right, to that statement, right now, again, for those of you that were looking to buy in the last year and got frustrated and stopped doing it, yes, now interest rates are a little bit higher. As I like to say, is marry the house and date the rate.
I've never heard that.
Marry the house.
That's amazing.
Date the rate, because in the next year or two, it's probably going to change again for a little bit better, right?
That.
But right now, if you're a buyer and you've been frustrated, right now is the time, because there's less buyers in the market. You're able to get an affordable price, negotiate. I just negotiated a house for a client, and we ended up getting seller concessions, and we haven't seen that in a while.
Oh my gosh, really? So, well, that's good. Good to know. So the market's changing to the buyer's favor.
It's a market right now that if you're still interested in buying and you're a strong buyer, it's a great opportunity to take advantage, right? So that kind of segues to my next question, which is, in the next year or two, on the lending side of things, right? How do you think that's going to change for the consumer or the buyer, right? Interest rates or whatever it is, loan programs and stuff like that.
Right.
What do you see happening in the next year or two?
I see, so Fannie Mae came out with an article that, so that 2023, they're thinking that the rates are going to go down to 4.5. So to me, that indicates, I think we were talking off camera, that indicates that they're seeing something that we're not seeing, or that they're seeing that inflation has peaked, right? And so as they raise the rates in these, as they raise the rates now, they're going to see at a point where inflation has peaked, and then they're going to say that like the pendulum's gone too far, we got to start bringing it down so that way people can incentivize them, right? And so that's something that I see coming up. Now, going even further out, to your point, what I also see, because let's say that 2023, inflation still, is a bug, right? They're still going to continue to increase rates. So that at some point they'll refinance in 2024. And if I'm not mistaken, that may be a presidential year. If we're going back to the days of when if you look back from the Jimmy Carter administration when he raised all the rates, and then Reagan came in and dropped the rates, spurred economic activity, regardless of what side of the pendulum you're on, really, we could see that happening again as a cycle. That could possibly happen again and spur economic activity. So to your point on marrying marry the house, date the rate?
Marry the house and date the rate.
That's solid. That is excellent advice. It's solid because really, you buy the house you love,
Of course.
It's different that may be different if you're an investor. You may not want to marry the house and date the rate because you have cost of capital considerations, right? But for those homeowners out there who want to buy the house you love, buy that, what is it, the location? What are the things that buyers want when they, what are they looking for? What are they?
Everyone's different, but yeah, location, schools, right? There's certain things that they want to look at.
Right.
But look, I remember in early pandemic,
right?
People said, nope, not going to buy. You're crazy. There's a pandemic. Towards the end of the pandemic, they said, no. Prices are too high. So it's one of those things that when you look at hindsight, it's like, man, I wish I would have, right?
Right.
So even now, property values are still going up, not as drastic as they were before, but they're still going up. So if you have the opportunity to still buy the house that you want, in a year, 2 years, 3 years, whatever it is, we know, like Brandon said, it's a cycle, right? I can be able to go back, call Brandon and say, hey, I need to refinance on my house, and maybe change it to a 15-year mortgage, a 10-year mortgage, whatever it is, for the same monthly payment that I'm paying.
Right. Great point. Because you make an excellent point there, right? So I'm going to give him gift number 3. What is that? I don't know, 2 or 3. I don't know where I'm gift number 2. My goodness. It's brilliant what you just said. And listen, I'm the mortgage guru, but that's brilliant. What he said, in essence, what I heard was that get accustomed to paying this right now. In a couple of years, you're now accustomed to that payment, but refinance into a 15 or a 10, right? That means you're paying your home off faster. And who doesn't want their home paid for? Because the rates are higher now, you're accustomed to make a higher payment. When that opportunity comes, when you made some payments, built some equity, and you're used to that payment, you can continue to pay that payment because you built your financial world around that payment. But now you cut the mortgage in half. Now being able to pay 20 years, a 15 year, a 10,
and you cut a majority of the interest paid on the upfront of the loan.
You got it, dude. So
more money in your pocket, right?
That's this guy's gonna take my job soon, apparently.
So what would you say now with, obviously we're talking about the market and stuff like that. What would you say now that the media has recently in the last month or so have been talking about the real estate and the housing and the recession and inflation? What's your intake on that?
So my take on that is a couple of things. We got to parse out, right? So you got to filter through the media, right? That would be the first. And what I mean by filter is that, there's, certain, it's flashing. Sometimes there were a couple of indicators of flashing recession, but really, what they're, from a housing perspective, to keep it in this ballpark, is that they're saying, hey, it's slowing down. Okay, it's slowing down. We understand that, but to your point, is it a buy opportunity? Yes, it is, right? Absolutely. The question then becomes, ultimately, in the recession, how many homeowners possibly could be in difficulties? And look, we don't want anybody to be in difficulties, but there are those that may be in a difficult situation by virtue of the recession. If it does come, if it doesn't come, whatever the case may be, there is always homeowners through life circumstance are in a difficult situation where they may need to sell. There's certainly buy opportunities there that I think you can capitalize by working with Mo to identify in your areas where those buy opportunities are. There's delinquencies, right? You could target those people.
Right.
You could, I'm not going to, there's special sauce, you got to deal with him. That's how he finds all his deals. I just said, I'm sorry, this guy knows where all the deals are at. So
short sales and foreclosures, they might be coming. Who knows?
Who knows? But really, working with a guy like Mo, he knows, based on his experience level, where that's going to come from, where possibly those homeowners that need some assistance are. So again, working with a guy like Mo, it's critical. And then having a lender like myself or anybody else, because I want to make sure that you have opportunities, you have the right to shop, believe it or not, but we'll earn your business. Is that you want to make sure that you're ready to capitalize on that. And that's the critical. That's really what you want to be in a position to buy. I think Warren Buffett, said when the tide's going out, that's when you buy. You go opposite when and I think that's important to notate here. Everybody's on the fence. I'm holding. Well, that's when you go in and you shark, right? You go buy working with a guy like him. And you just mentioned concessions. Yeah. And can you tell everybody what concessions are? They may not know what that means in our world.
So the contribution, right, is you're able to negotiate. Believe it or not, I've actually, during the pandemic, I actually helped a couple people get lower than asking price and help with seller contribution to be able to go towards that person's closing costs, prepaids, or lowering down their interest rates. So again, it's a skill set, right? You got to be able to negotiate. You have to pinpoint what's on that property that I can take advantage of and put my buyer in a better position in regards to purchasing that house. So I think when you look at an agent, you have to look at those particular skill sets because I think it's important. Yeah. I'm not just promoting myself because there's plenty of people out there, but like I said earlier, a lot of the agents that came into the business in the last 5 years or so,
they got it in.
There's a big discrepancy of what they know real estate in comparison to somebody that's been in it for a while. I've been in real estate since 2003. I did survive the the crash. Brandon's been in the business for a long time.
Since 2003, that's really funny.
Yeah?
I had the same year. I got the same year. Yeah, I was an intern at a title company. That's how I got it.
Nice.
Yeah.
So look, there's a lot of experience, right? But we're just trying to give you guys information in regards to obviously what you guys can be thinking about or benefit from in the near future, right? So obviously Brandon is the best in my opinion. We're gonna ask him a couple questions in regards to like the loan programs and stuff like that. What would you say, just to kind of give somebody that's looking to buy, maybe a first-time home buyer or something like that, what is the difference? I know there's like technical stuff behind it, but difference between FHA and conventional loan?
Okay. Real basic level. FHA is geared for HUD, right? Housing Urban Development, HUD. Conventional is geared up for Fannie and Freddie Mac. Okay, so those are names, but what does that mean? FHA is usually for your traditional first-time home buyer mortgage. The guidelines, right? The guidelines, when I say are like kind of the rules, right? The guidelines, it allows you to buy with as low as 3.5% down on any purchase price, and it allows you to have an expanded debt to income ratio. What does that mean? That means I can give you more mortgage if you have a lot of debt, right? So it's more lenient, more forgiving, more allowing for the first-time home buyer to be able to buy that property, get in, and then make that their home, right? And then by contrast to conventional usually in certain areas can be as low as 3% down, but it's stricter in the debt to income ratio. It wants a more conforming file. That's our industry word, conforming, but they want it more conforming to a certain set of guidelines and a certain set of standards that is tighter than FHA. So if I'm a first-time home buyer, right, I'd like to have, if I have a low down payment, I may look at FHA, I may look at, if I got some student loans, everybody got student loans, some high student loans, there's different products in the marketplace. So that's a first step to describe that. There's so much more, and when you come into our shop, we can kind of go through what makes sense for you. Ultimately, what I tell my clients and your clients is, guys, forget about the purchase price. What are you going to pay monthly? What is comfortable in your budget? I mean, honestly, we get so fixated on, I bought a $500, $1 million home of $400,000, whatever it is. It's really, can you live with a payment? Are you comfortable with the payment? Is this a good payment for you? How does this payment, help you in your other activities and light bill? Are you over leveraged? Let's talk about the payment. Let's spend time there, because what you said, you marry the house, you date the mortgage, but you live with the payment.
Right.
So you got to be comfortable with living the payment.
For a good old 30 years.
For good old 30, you'll live it with that. That's your roommate for 30 years, that payment, So you better be ready to make that.
And I think that's important, right? Because even though, yes, the guidelines and requirements on certain things, right? Somebody will fit in FHA and conventional.
Right.
But it's also important to know, and this is why, dealing with Brandon and myself, or whoever you deal with, right, is important, because not every property can go with FHA. Not every property, so there's a difference. I was just talking to a client today. She's approved for a conventional, and she freaked out because she's like, but I only have to do 3.5%. But what happened? I have 20% to put down. I said, great. I said, that helps you. Right. But she still thought that conventional was a 20% down traditionally, right? But there's obviously programs that you can do a lower down payment on FHA and also conventional loan.
Correct.
So again, it's just a good reason to kind of educate a little bit.
Absolutely. Folks, your mortgage is, so I think what in our industry, so this is a shot on our industry. We lose sight as mortgage loan officers, as realtors, as professionals, that this home usually is the single largest investment or asset that the consumer holds.
Yeah.
We lose sight of that. We become desensitized to that. And so really work with professionals that understand that, because it's not just a transaction. It's guys, we're getting you this asset on your balance sheet for life. This asset can produce rental income one day. You could pass it on to your kids. You could start a new business with it, because you can get a home equity line of credit. You can do all kinds of stuff with this asset. So always buy right. Buy with a pro like Mo. There's your slogan.
That's my slogan.
Oh my goodness.
Gift 3.
Yeah, that's gift 3. Buy like that's awesome.
I like that one. That was pretty good.
Buy with a pro like Mo. I'm rapping now, right? My kids would make fun of me. They really. Anyhow, don't get me started. And really focus on the buy side. So I recently had a client who was looking for a $2 million home, and we had a conversation that went something like this. Client, she was telling me, I love the house, I fell in love with it. It was a townhome on the beach. And I'm like, you love it? I said, yeah, you love it. But she goes, what do you think? I go, I'm glad you asked, because me as mortgage practitioners, I don't want to interject my opinion, because this may be their dream home, and they may want this. Who am I to tell them you can't achieve this, right? Mm-hmm. So I'm not, but she asked my opinion. I said, well, thank you for asking my opinion. And, my opinion was, do you really want to live with this mortgage payment? And then you could hear the silence at the end of the phone. No, Brandon. I said, okay. All right. So would it be all right if, maybe you look at different price points? And we had a great conversation about that. And today she brought in a contract for $900,000. So possibly that conversation saved her literally $1 million.
Right.
And she, just because you can buy, this is like gift number 4, I guess. Mm-hmm. Just because you can buy doesn't mean you should buy.
Right.
Like that big home, the big house. Be reasonable, be economical. Again, you're living with the mortgage. And that's my biggest advice to everybody.
And that's why you're different, because, and I'm not just saying that, but it's true. It's the relationship, and you're focused on the relationship long term, right? Because it means something to us. It's not just the transaction.
Yeah.
Which is important, because that goes, and believe it or not, our clients feel it. People out there feel what's a relationship and who's dealing with just a transaction.
Yeah.
It's out there, right? What would you say FICO score? Mm-hmm. for an FHA and conventional, on average, there's different criteria and stuff, but just what is the requirement in regards to getting approved for FHA and conventional in regards to FICO score?
All right, so I'm gonna put on my warning mortgage nerd hat, right? Mortgage nerd hat. That's a disclaimer that's about to come on, right? So conventional, your conforming loans, your Fannie Freddie loans, if you're watching earlier, 620 is the start, okay? FHA, 620 is the start. And then the big asterisk, right? But there's something called a manual underwrite, which means if you don't have a 620 FICO score, you can get a mortgage loan. As a matter of fact, I've done mortgages for people in the 550s and the 500s. And how does that come? Because it's a manual. How does that come to fruition? It's because it's an FHA manual underwrite. Only certain lenders do those. And I'm gonna take on the mortgage nerd hat and go one step further. That's the difference between mortgage brokers and bankers, right? More independent, mortgage brokers, right? We have the menu of lenders that we can say, hey, Mrs. Client or Mr. Client, based on your unique needs, let's go here to that lender, right? That's the box. You walk into some of the big box banks who will remain unnamed. This is our menu, take it or leave it.
Right.
That's the biggest difference, right? I got a menu, I got access to him, her, that bank, this, Mr. Client. Based on your unique scenario, based on the amount of closing cost assistance you make, whatever it may be, let's go here because of that. That's the expertise a pro brings to the table, like you. That's it. That's what we do. When you go walk into your bank, I know it's comfortable because you make deposits there. I know it's comfortable because you go there, but you're just a number.
Yeah.
It's the truth. They're processing, they're not doing the mortgage in that office. They're doing it in somewhere USA, right? So, and they only have one product and it is what it is. You take it or leave it. That's why in my shop, I like to say I have a mortgage for every person that walks in the door, because we really have access to the world of finance. And if you're not approvable now, I always say you will be approved. We just got to put work into it. So It doesn't matter if you're not approved today. Don't become discouraged. You will be approved. We put a mortgage plan in place to get you approved. And working with Mo, being on top of that plan is what gets you there, right? I always say success, results are effort equals results. And that's how you get your success. So we'll put the effort in. You got to put the effort in. And we'll get you results, and we'll get you that mortgage. That I can absolutely guarantee, because we're gonna.
That's for sure, and I've definitely seen it from him in his office. And you touched on something in regards to approval, right? So, last question would be basically in regards to, we started with this conversation, right? But aside from the Bank of America, is there any zero down payment closing cost programs out there that these buyers that are looking for homes now in today's market currently, aside from the Bank of America, right? Are there even any other options that you guys can find for someone out there in the consumer to be able to get a zero down or even closing cost assistance or anything like that?
Absolutely, right? So when we look at that menu, again, Mortgage Nerd hat's still on, we open up the menu, and there I have lenders that we can say, okay, someone needs down payment assistance, let's go there. Let's utilize that, right? Someone needs closing cost assistance, let's go there. How can we assist Mr. and Mrs. Client to get into that home? It's certainly a team effort. When we meet to do your pre-approval, I always recommend this. Come on into the office, bring your docs, and then what docs, that's a different story. Docs are just like income verification, asset verification. Bring your docs in. I want to make sure that you got income and assets, take your loan application, pull your credit, bada bing, bada boom. Then we know what you got. So then we're working together. So okay, they're pre-approved for this. He's out shopping for that, and then then he comes back in and we start the mortgage process. But without having that initial interview where I opened up the menu and said, hey, this is the best based on our mutual working with this client. This is what they need, because then that's what I do. Then we pull out the mortgage product and we utilize it in the marketplace. So yes, there are other products outside of the big box lenders that can achieve a zero down payment loan.
Okay.
That's the long and short answer to that. But really, working with a pro like Mo, I'm gonna make him like a license plate or something, you know.
I'm on the canvas right behind my desk.
Working with a pro like Mo, you know, it makes a world of a difference. I can't tell you enough that in this industry, experience matters, and having a guy like him that can just really, you know, especially when you have a relationship, right? I think what makes our business relationship special is that, you know, when the client comes in, we're all in, right? So if you know, it's all hands on deck. It's how are you going to do it, Mr. and Mrs. Client? You know, what is it? What is the alignment? How are we going to get this? What are we going to do? This is how we're going to do it. Ready, team, huddle, break. You know, and we go for it. And that kind of gusto is what separates us as a partner, as a business partnership, but really what separates us as people.
Yeah.
Like I think you thought, you know, and the clients, like you said, feel it. I mean,
yeah, you know, there's been so many times that I've sent obviously you business, and just the response of how you respond, the personal response, the personal messages, the team attacking the situations and getting them in and getting them their paperwork and getting everything done makes a difference, because on my end, I hear it. Oh my God, it was great. Oh my God, it was so nice. Oh my God, that video was beautiful. You know, and that is what matters, right? So again, it's those relationships that we're having that's important, right? So obviously, you know, I've done business with him a lot, and he knows it. I've told him. I've bounced around in my years because I needed to find someone the right fit for me, right? And my clients, because I am a certain way, I cater a certain way to my clients. I need to make sure someone else on the other side is doing that and not just sending you a link to do a pre-approval application. Right. So since then, we've been rocking and rolling, and it's been great. To me, he's the best.
Honestly, I'm honored and humbled to hear that. Like, it's not because this is a shameless plug, folks. It's like, as a mortgage practitioner, like, I'm honored and humbled, obviously, to be on his podcast here, but obviously just honored and humbled to hear him say that, because, you know, there's so many times and so many transactions where, you know, you don't get the thank you, right? And so, you know, I'm thankful. I mean, I want to thank you for that.
Of course,
because it means a lot to me to serve our clients, serve people, you know, because, you know, I want to make a difference. And I think, you know, I know you want to make a difference. And that's what really sets us and our clients apart. You know, we really impacted them. And that's why we don't look for the transaction, right? We look for the relationship. I mean, how many times have your clients, called you? How many times have your clients, asked you, hey, how you doing? How's your daughter? How's this? How's that? That's cool.
Yeah.
To me, that's not like calling bank of
your
X,
teller, your teller.
Bank of X, right? And go like, hey, where's your kid? Whose kid? Where's Bob? Can't find Bob. Bob who? Bob, where's Bob? Bob?
Yeah.
Who's Bob? You don't got that here. And that's what you get with working with an independent mortgage banker like myself, working with my firm, working with any one of my colleagues in the industry. Really, just like anything, there's good and bad apples. Work with a pro like Mo, myself.
Carrero Mortgage Advisors are located in Miramar, Florida, guys. I do appreciate coming out and doing this for me, not just for me, but for the people out there, and just kind of giving them the information more on the lending side, right?
Sure.
We'll do more of this. We'll dig deeper into these programs and talk a little bit more. But I do appreciate your time, man, and thank you so much for talking about these topics.
No, my pleasure, and thank you for sharing. And hopefully, I need a refill, apparently, of my coffee. You know what I mean? I ran out. I'm like, drip, drop, drip. But anyhow, thank you, everybody. God bless you. I hope you have an awesome and amazing day. Looking forward to meeting with you and chatting with you. And all the best. Thank you.
Peace out. Thank you. Appreciate it.
Yeah, man. Take care.